Good afternoon, guys. You know who I am. This is Mr. Reed. Uh, I, we don't have an exciting purview today, but I am going to be on every evening. Uh, Today, we're going to be talking about the details of the community REIT. What is it? What are we doing? And what are we attempting to accomplish? So, if you give me a moment, I'm going to pull something up. I'm going to pull something up. Okay. Just a moment. And we're going to have a lengthy discussion. And I hope people are going to come on and join us. But we're going to have a lengthy discussion on what the community REIT is. The community REIT was an ideal that I came up with at the behest of my TikTok community. Um, I don't believe it was a provocational conversation where people were like, well, Mr. Reed, we don't believe you can do this or anything like that. It was actually, I think, motivated by people's trust online of me. And I was actually asked over a period of time, hey, won't you do some business with us, Mr. Reed? And so I'm going to come on in attempts to try to popularize our YouTube and outline some things. Now, you guys understand what community REIT is, don't you? Well, if you don't, the community REIT is a hospitality and healthcare real estate investment trust for my followers on TikTok. Okay, and now YouTube. Unfortunately, there have been several times where TikTok has removed my site, and that's put a gap in between my relationship with my followers. And so this push on YouTube is a push to regain that velocity of my followers. Okay. So the first thing I'm going to do is I'm going to start to discuss what is all that information that you post online, Mr. Reed. What is that? What are you always posting online? What is, on the website, we see all this information, but what is it? Okay. Let me first start by saying this. If a person chooses to do business ethically, comprehensively, and effectively, then they have to lay down the groundwork of what they're doing. And what I believe took place is that Mr. Reed became so popular so fast. Who is this guy online talking about business and seems like he understands what he's doing, and he speaks with wisdom. He has a relationship with God. That's what I really think that happened. And then I talked with a tone that seemed as if I was for Black people, which I am. Okay. And again, for me, it was just a normal thing for me in my personality. And then when people start talking about one of my favorite things, business, that gave me an opportunity to help people. So after much prayer, much ideology, and much thought, I came up with the community REIT. But I think people got caught up with the concept of the community REIT. It's almost like going to church. They thought it was just exciting. We'll get started and, everything will go great. Not understanding, and not that anything's going wrong, not that understanding that all this took time. And in all honesty, the most patient people couldn't recognize the level of deep knowledge, both environmental, philosophical, and also pure education that needed to be applied. And if I'm being honest, it took time for me to wrap my head around who my partners were. You have to realize, Even though I've gotten to know thousands of people online now, I didn't know any of these people. So as a person that's not apprehensive but trepidatious, I had to make certain that I did things morally, ethically, comprehensively, and legally. So it takes time to do that. So people got excited. They said, well, here's this guy that built a $150 million company with his partner. Here's a guy that struggled, that's gone through any things and rebuilt what he had. Well, he obviously knows what he's doing. Just listen to him. Well, that's not enough. I know it wouldn't be for me. So there's no way in the world, even though most of you don't have the experience that I have, that I was going to allow you to do some half butt type of deal. Okay. So then I built this website, and then slowly, comprehensively, and litigiously, it took time to develop, because you have to realize this was a conceptualism that came out of me. It's not something that I modeled after something, because what we're doing has never been done with the Black community. That's the first thing you guys should be proud of. This has never been done. Okay. The second thing I had to do, I had to sit down, identify other environmental or due diligence breakdowns to make certain that I identified projects, even if they were just informed like ours. So when I say never been done, I said never been done with Black people. Okay. So in breaking this down, I said, okay, this is what I'm going to do. I know how many people I need. Well, first of all, I said this: the starting point has to be different for us. And what do I mean by that? The starting point had to be high. I have had so many people say, well, Mr. Reed, why don't we just do one? Why don't we do a small project first? No. Let me ask you guys a question. How many companies have you seen, not excluding the guy in Atlanta with Black Wall Street, that were doing small projects? Let's just do it like this, okay? And the perspective that I looked at is, okay, well, you think high level. And in fact, to me, high level is mid-level, because that's where I swam. I swam 10 million, 40 million, up to 100 million as far as projects, okay? I've never dealt with billions of dollars. So then, guys, I had to wrap my head around that. Now, I know, just like when they hear a new rap song come out or a new sermon come out, they're going to get excited. But it's not about excitement. And Mr. Reed, being 53 years old and in business for 25 years and in the construction and development business for 36 years, I knew that excitement, neither was it going to last, nor was it going to work to do what we needed to do. So then I had to slow this thing down and start teaching. So if you guys know, it's taken me almost 8 to 9 months to lay down the foundation of, first of all, what we needed to be and how we needed to be, how we needed to do it. Okay. So this is the general synopsis I came up with. And then I'm going to show you how it's laid out in these documents. And I want every one of you who are listening and are going to listen later to go online and take a look at the website. But now you'll know what you're looking at and for. Okay. I'm going to try to do, look, it's been a long time, probably 10 years before I've communicated on a regular basis to articulate a strong foundational project. Okay. Specifically something that came out of me. So even though it came out of me, there are so many moving parts. I need you to be patient with me. Okay. So this is what I came up with. 40,000 people. If I'm going to get to a number, what number do I need to get to? I need to get to $20 million. Okay. Because if I got $20 million, I can get a strong line of credit for that 10%. So let's say $200 million line of credit. A $200 million line of credit would do what? It would give me the ability to hire, or not, let me stop saying me. it will give us the ability to hire high-level people. Now, you got to understand where we're going with this. If we're going to get to the point where the Black community has a sub-economy that will support generational wealth and bring not impoverished, but working Black people up to an upper class level where they can start businesses, leave inheritances for their kids, and not have to concern themselves with other communities and their prejudices against them, I had to start at a level. So how do you start at a level of $200 million when you're dealing with regular people that, they can go out and eat $100 meal, but they're still coming out of their check every week, okay? So I had to come up with a number. So after much evaluation, I said, everybody can afford $500. Everybody can afford $500. And it wasn't just that easy. I had to break down a lot of numbers because I had to know where I can go from that point and how fast we can get there. And I knew that $20 million, $200 million line of credit will get there. And I'm going to say a lot in between, guys. I just need you to pay attention, okay? That's all I need you to do is listen. And so I knew that I could get the executives with that $200 million line of credit. There's not many startup companies, which is what we are, that can arrive at a $200 million value line of credit. But here's the thing about it, and this is what I need to tell you. Those things run side by side. If you don't have the $200 million line of credit, you're not going to have an executive qualified to do what we need them to do. Do you understand that? You're not going to get a guy that's going to leave a job paying him $4 million a year, but he has a little stock in the company to leave that company to come work for us unless we have the guy. Now, and if you don't get that guy, you get someone that may understand the business, but is not connected to the business at the highest level and does not have the ability to grow that company where we needed to grow. And the estimate that we came to was $3.7 billion. We said originally 5, originally 7, now 10 years to get to $3.7 billion. Okay. Now, you guys know within REITs, and I don't want to get off subject because I want to give all the big details before I go into, but I wanted you to know that those things run by side. If you're going to grow to a Fortune 500 company, it takes time and it takes the right structure, both fiduciarily, which means who manages the money and the money exists, and through executive management. Okay. And then I said, okay, that makes sense. And when I say, guys, I had almost 1 million followers. I had 40,000 people and more ready to give money. But when I started teaching and laying things out like I'm doing now, that fell off. And then I had to ask myself, did I make a mistake? No, I'm not going to do that. I'm not just going to take your money and have it sitting somewhere. That's not how you do business. And you think about it, that never happens anywhere. But it definitely can happen at that level, okay? Because we need to build trust. You think about it. When acquisitions happen, when anything happens, when investments happen, they don't just get the money and just, go. There's a level of understanding, a level of teaching, a level of education, specifically to a group of people that don't know me from Adam, okay? That's just my own integrity, right? That being said, it took me a long time to progressively figure this out. So the first thing I had to do, since you guys know my trepidation, I had to figure out how am I going to take these people's money and protect it? How am I going to let them know that their money is protected? And then I came up with the idea. This is what I'm going to do. I'm going to become the proxy. The proxy is the person. It's not always the person. The proxy usually represents a group of people like I represent you guys. Now, it wasn't a decision you guys made, but I figured foundationally, since I'm going to do all the work and I'm not going to have any help, then I'm the proxy. Nobody disagreed. Nobody said, well, Mr. Reed, but if he's going to do all the work, we're going to see. I did all the work. So I came up with the idea of intake. And the document is on our website. You can see it. It shows you how your money is going to be received, and it excludes me from the money. It says in no way that I can touch your money, be involved with your money, anything. It shows my entire role. The only role I have is an investor just like you guys. But I'm internally representing you within the organization. You understand? We have a board that protects you. We'll also have lawyers. We have an accounting firm. We have an architectural firm. We have all these things laid out. All of this is on the website. Go and look it up. All that being said, how we're going to receive their money. Now, these companies had to know I was serious. So then I had to develop the trust, and that trust was based on original relationships. And there were concepts, there were iterations that I had to arrive at to gain these people's trust. So then we started video calls every week, and we've been doing that for 8 months. For 8 months, we've been having meetings. And this is what that brought. For those who don't realize what that brought us the architectural firm, that brought us the flag or the label. For example, for those who don't know what a label is, Hilton, Marriott, whatever. You guys have no idea. You don't have a project if you don't have a label. It took a long time to prove that. So this is what I've been doing, okay? All that being laid out, I created an intake document which legally tells you what will happen to your money. You can go online, go to our website, open up the site, and it'll show you every process. It'll show you who we are, what we're doing, how we're going to do it, what my authority is. I am not the CEO. I am not the president. I am a representative of the organization, and I'm a stockholder. I am the largest stockholder to date in the organization simply because I put it all together. Okay? Now, I'm going to lay that out and show you in a document. I apologize, but I can't turn this around. But if you'll let me, when you go on the website, you can look this up. But it needs to be said because it needs to be articulated. Because this is the main document that you've been waiting on, or I've been waiting on for you. Okay? This is the document that lays out everything that I had to, and then I had to sign it. And you'll have to sign it. Okay? If you're going to be a part of the Community REIT. Now, some of you, when you go on the site, you'll see Community REIT. Community REIT is a general name. The name of the organization is Heritage Group. Okay? Now, I'm not going to say any more than that. I'm going to start on the document, and I want you guys to pay attention. This is what the front of the document says. It says the Community REIT, a Heritage Group initiative. Y'all like that, right? Because that's what it was. This was an initiative provoked by you guys, okay? Investor and Treasury Prospectus. What does that mean? Investor and Treasury. Who's investing, okay? And what's going to happen to the money? Prospectus means the ideology of how the money is going to be spent and the legality in which it's going to be spent or represented, or the idealism of it, the conceptualism of it, okay? Now, that's just the front page. Now I'm going to go into it. Executive overview. The Community REIT was founded by Juan Reed after 30 years of leadership in commercial, industrial hospitality, developed, blah, 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 motivated by 100,000 of his social media audience. Seeking community-based investment, Mr. Reed proposed using hospitality, healthcare, and primary vehicles for African-American sub-economic development. Okay. The idea of the REIT unites 40,000 investors, each contributing $500 to create 20 million equity base that secures a $200 million line of credit, positioning the REIT to scale hospitality, healthcare, and infrastructure. For those of you who don't know, and I know you hear this word a lot, so I don't mean to be insulting, scale means to grow. It means you have a plan that you represent and you're trying to grow it there. Okay. Heritage REIT capital and treasury structure, operational, financial, and investor return framework. Okay. We'll start at A, and this is the second chapter. We'll start at A. Heritage Management LLC, the operator, will manage hospitality, healthcare, and real estate assets, earns base management fees 2 to 3%, and performance fees 10 to 15% net operating income above benchmarks. Okay. Now, some of you may not even understand any of this, but I need you to read it, come back so I can explain it to you. But let me explain what NOI is. Net operating expenses is essentially everything that runs the internal organization within the company. All of the employees, the maintenance on the facilities, but that income, what it does, because it's net capital, what it does is a few things that go out in that. Your dividends, which means the profit that we make by the vehicles of hospitality and healthcare, go to you. Let me make it simple. When the hotel makes money, okay, makes money, not general operating costs, but when it makes money, it's supposed to go to you, right? That's what it is. So part of that is that all the taxes, all of that is in the NOI, right? All right. Reports quarter. Okay. The NOI above benchmarks. This is all what, let me slow down. There are two organizations within the company. One is the bank, one is the operating company. The operating company is actual executives within the organization. It's the lease on the buildings. It's everything that runs an organization. Lawyers, everything. CFO, CEO. The other, which we're going to get to, which is B, is Heritage Holding Company. It's a holding company. Now, a holding company is a bank. Okay? Every REIT, real estate investment trust, should have a bank. You're always going to separate the operations from the bank because you don't want to accidentally commingle funding. And making a separate holding company that is a bank does two things. It first of all allows you, again, not to commingle, but it also allows you to make separate investments outside of the original organization or meaningfulness of the organization. Okay, so let me give an example. Well, this is what I'm going to do. Allow me to articulate a little more, tell you what the Heritage Holding Company does, and then I have an example in the document that articulates what the holding company is allowed to do. But first, I'll say this. The Heritage Management LLC reports, they have to give quarterly reports to the REIT board, which I'll be on. I'll be on the temporary board. I'm glad you brought that up. I'm on the temporary board, and I'll also be a part of the professional board, the people that will actually pay to be a board of the organization. So you have a few levels, and the management and their pay will come out of Heritage Management LLC as well. Now we'll move on to Heritage Holdings, which is the bank. It'll say in the document, the bank. Heritage Holding, the bank, serves as a treasury and capital engine, managing $200 million revolving credit line, provides liquidity for acquisitions, refinancings, and strategic co-investments. Now, what does that mean? That's an important part of it. And I need you to hold on to that there. Heritage Holding, the holding company or the bank, has the ability to provide liquidity for acquisitions, refinancing, and strategic co-investments. Provides liquidity for acquisitions, meaning this: we have the ability to buy other organizations. That's what that does. The bank. That's a part of its modality. A second part of it is refinancings. Okay. Sometimes when the market changes, things need to be refinanced. So we have the capital to do that. Strategic co-investments. Somebody has a refinery they're building in Africa. We have the ability, well, let me explain it to you. Those of you who don't know how to build refineries, I do. To build a refinery, the first thing you need is something called FF&E. Okay? If you're building a refinery today, don't ask me how I know this, I do. You'll know too much about me, you know why. It's about $5 billion. That's just starting. It'll take at least 5% of that to do the FF&E. Okay? FF&E is essentially front-end engineering, or to do the engineering for the project. And right now, today, it might cost more than that. What is 5% of $5 billion? It's a lot of money. 2.5, yeah, or 250 million, yeah. Think about it. We have the ability to leverage that. Now, why would we do something like that? Because their obligation to us financially is greater than that $250 million. And that's where you have someone, not me. So that's why we're going to hire somebody smarter than me to run the company, or at least smarter in this, okay? Because it's not about smart. It's about who you're associated with. So the person we hire is going to be a couple of things. They're probably going to be familiar with the REIT business, not just specifically healthcare and hospitality, but familiar with it in general on a high level. That person also is going to be familiar with private equity. They're going to have the relationships within private equity and the associations to make sure we are in their purview, that they can see us, that we're at least in their periphery, okay? And so that person will be close to those kind of projects and those relationships. On that, we might make $30, $40 million, maybe 50 million, okay? In a short period of time. And here's the thing about it. The way value works in organizations, you have to realize good debt is valuable too. So if you say, well, Mr. Reed, how is having $250 million out there at whatever rate we charge them, 12%, whatever, 7%, whatever. I don't think you can charge them more than 7%, but that debt being out there is valuable to us. I know you guys, you may not understand that, but somebody owing you $300 million is valuable. Okay. And the longer, or not the longer, you want it to be owed to you for at least 5 years. On our books, you know what that does for us? That allows us the opportunity to borrow more money, because somebody owes us $300 million. Now, here's the thing about it. We didn't lay out $300 million. And even what we're paying off our line of credit is progressive. But on our books, our CEO will be able to sell that for more. So that changes our valuation. That changes how the stock market and other people look at us. So originally we were worth $20 million, and then the bank gave us $200 million. We've kept our loan, we kept our payments up. And now we've sought out other projects in relation to that line of credit. And now we have what they call good debt. That good debt takes us from $200 million because a line of credit, a good line of credit, also is an asset. So now you have $500 million. So you immediately go from a $20 million company to a $500 million company because of good credit and good debt. Okay? Because debt is, you never loan money to a company that you know can't pay you back. And how do you know companies pay you back? Revenue. If they're building a refinery, they'll have revenue. Do you understand what I'm saying? Right? Now, forgive my preliminary explanation, but that's the gist of it, right? So you have Heritage Management, you have Heritage Holdings, which are the Community REIT. The Community REIT is a facilitator for 40,000 people with $500 to invest, okay? I'm going to move down, and this is the third page. It's called Heritage Holdings Capital Participation and Treasury Agreement. Treasury always means money and what you do with it. It's the fiduciary aspect of business, okay? So in these documents, you'll always see, not particularly in these documents, you always see that things have to be signed by me and the CFO. Now, all I'm doing is acknowledging you, because just like you guys don't have the ability to distribute money or touch it, I don't either. Neither does a CFO. Neither does a CEO. The only person that has the ability to distribute money in our organization is a CFO, who in this case will also be the fiduciary. Okay? So let me get into this. Now that you know, every time you hear treasury, you'll know what they're talking about, how they deal with the money or handle the money. All right, Article 1, purpose and structure. Holdings operates as the treasury and capital allocation vehicle for the heritage ecosystem, managing cash, credit, and assets investments on behalf of the REIT and investors. Management oversees operations, property development, and revenue generation under its mandate. This agreement defines investors' participation rights, capital distribution, mechanisms, and legal parameters for profit realization and payout. Article 2, capitalization, and credit facility. Holdings maintains a $200 million revolving credit line secured by stabilized REIT assets levied by 50%. Investor equity contributions total $20 million, leveraged across assets portfolio. Credit facility utilization, 50% hospitality and healthcare, 30% external strategic ventures, 20% liquidity and acquisitions. What that'll show you when you go and look at it is how the money will be distributed and who is distributing it. Okay? Which company? Essentially, what you'll have in Heritage Group is two organizations. Again, one is the management company or management organization, and the other is the bank. I say the bank to make it simple for you. Now we're going to move down. Article 3. Okay, I'm sorry, I missed 3 articles under capitalization and credit. I need you to hear. They're very important. Credit facility utilization, 50% hospital. Well, I did that one. All borrowing and deployment requires dual authorization by the CFO and the proxy. Do you understand that? Okay. All borrowing and deployments require dual authorization by the CFO and the proxy. So unless both of us sign something, and again, I'm just on the board. The proxy is just on the board, but I speak for you guys. I speak for you guys, right? And myself, but I speak for you guys. Article 3, financial performance and distribution. That's how you'll get paid, how much you'll get paid, and when you get paid. Okay? Management transfers 70 to 80% of NOI. Remember, I told you guys net operating income quarterly to holdings. What does that mean? I told you guys earlier, again, there's management and there's holdings. Okay? So quarterly, 70 to 80% will go to the holding company. Holdings consolidates NOI, again, investor equity, and credit proceeds into the Heritage Treasury account. Okay? Annual investor distributions follow, and it lays out a formula. You're not going to understand it. I was actually told by the accountant to take it out, but I'm not going to take it out because some of you guys might know a finance person, and I want you to know what you're talking about, okay? And maybe they can better explain it to you. I don't have time right now. 30% of net profits distributed as dividends, 70% retained for investment. Now, here's a model example. You guys are going to be asked the question, okay? Our projection goes out 10 years. You have to ask yourself, do I want $500 back in a year? Or do I want to make $13.8 million in 10 years? That's what you have to ask yourself. That's what you have to ask yourself. My goal when I started talking to you guys about this is that everybody becomes a multimillionaire. In order to do that, how can I explain this? In order to do that, for the lack of a better term, you have to re-up. Okay? I know that some of the people that I'm talking to will understand that language and vernacular better. And I'm not a banker myself, but I am good with contracts. Every one of these contracts I wrote. Okay? Lawyers do not write contracts. People tell them what they want. Okay? This is all Mr. Reed. So you'll be given an option at some point. Do you want to keep your money in the company and become a millionaire? Now, don't get me wrong. You're going to get dividends. After 3 years, you're going to start receiving a check every quarter to every year. At the end of the year, you get a nice check. But do you want to leave that in there and become a millionaire or not? Because you have to understand something. And this is something hard to explain to my Afro people. Profit doesn't mean anything. Revenue means everything. And if you look at the characteristics of how real business is done with revenue and growth and acquisition. I'm telling you guys, this is coming from somebody who sold a company. You have to acquire, you have to generate revenue. And you can't just take your money out. Now, there's going to come a point. You say, well, Mr. Reed, do I have to wait 10 years until we get to $13.8 million? No. But there is going to come a point where you're going to have to sell some stock to get that out. Because think about it. When you sell in stock or you transferring stock, you might want to get out. So you say, well, can I get $1 million and I'm out? People are going to say, yeah. Because as the company and the value of the company grows, the value of the stock grows. That's why we're making all these acquisitions and strategic relationships to invest in other people's projects. And, that's why we're doing all that. Now, I will tell you guys this. In this document, as I move down, it will tell you that I have ownership in the company. I am the largest stockholder. I own 15% of Heritage, okay? But I will not receive a dividend for 5 years. It's in the contract. This is why I want you guys to read this. I will not receive any dividends. A dividend, for you guys who don't know it, a REIT, a real estate investment trust, has to pay 90% of its profits to the stockholders. Okay, so you get paid two ways. You grow your stock. Okay, so you got stock, and your stock has value, but you also get dividends. Now, I wrote this where most of you will not receive your dividends every time it come up. You'll hold your dividend back or a percentage of it so that we can continue to grow the company to $3.7 billion. Okay? That's also why the number is so low. That's also why the investment number is so low. I know that no one that's listening to the sound of my voice is going to miss $500. I know that. Okay? Now you tell me when that wasn't a brilliant idea, and I didn't come up with it myself. It came through a lot of prayer. But that was the idea. Nobody gonna miss $500. But you literally can see it. You can see it in your stock, you can see it in the company growing, and you'll definitely be having money come in. It just won't be $1 million. Okay? There will be a point where the stock is worth a lot. Because there are levels that we go through. Let's say we go through 3 levels. And in that 3rd level, we do an IPO and we go public. Then your stock gonna look good. But you have to ask yourself, Mr. Reed made a promise to me. I need to hold out till I get this $13.8 million, because if I don't, somebody else gonna buy my stock when it's worth $100,000 and they're gonna wait. Do you understand what I'm saying? Am I not strong enough to wait this period of time? I'm gonna be working anyway. It's only $500. So you have to ask yourself that question. And the reason I'm vehement about that, and the reason I'm waiting, I don't want any dividends for 5 years. I'm not taking anything. Okay, let me continue. This is talking about you guys, so listen. This is Article 4. Stockholder payout mechanics. Each investor contributes $500 combined, 200 million equity and 20 million equity and 200 million credit yield, 10x leveraged ratio. Okay. All that means is $20 million plus 10. That's the credit line. Okay. Second line, 10-year protection, 10-year projection. Investor reaches approximately $13.8 million cumulative value through compounded ROI, return on investment. So your return on investment, if you stick it out for 10 years, $13.8 million. That's what I promised everybody listening to me. That's what I promised. And I know we can do it. See, let me explain something to you guys. There was a point in my life when I lost everything. Okay? Well, I thought I lost everything. And what I really gained, I didn't lose anything. What I really gained was patience. I wouldn't sit my ass down somewhere. I was always worried about something. My dad used to say all the time about my other parent. All they do is worry. And I used to ask myself when I became a man, how my dad don't worry? All my dad ever worried about was his wife worrying. I learned my lesson. Mr. Reed don't worry about nothing. Whatever I have to lose was either my own negligence, and I can accept that too, or my ability not to keep my peace when things start falling apart. When I learned that lesson, I became a magnet for money. I'm asking you guys to do the same thing. Be patient. Not with me. See, this is what I don't want you guys to realize, and this is the difference between a lot of people that are marketing stuff. I'm in this with y'all. That's what you don't get. I did all this. Do you understand? And that's not a brag. That's not a that is the truth. And you guys motivated me to do it. Don't let impatience be the reason you lose out. There's nothing that can stop this. You guys say businesses fail every day. They do. But it depends on where they start, where they go. And it depends on the relationships they have. We still have a lot to go through. Do you guys think I'm just going to, now I keep saying me because there's only 3 people on the board right now. And I'm the proxy. But what I mean by saying that is this. You think I'm going to hire a CEO and a CFO that ain't well connected? My hair just look like this, guys. I know what I'm doing. This isn't my job. Look, let me explain something to you. I heard a guy today talking about a senator. And if you look this senator up, his name is Ted Cruz. He graduated from Princeton or Harvard or one of these schools. And this guy who interviewed him, you guys know who I'm talking about, so I'm not going to say who I'm talking about. He said that Ted Cruz don't have intelligence. He says he has a high level of vocabulary, but he's not intelligent. Now, I think outside of myself, he's the only person I've ever heard say that. Because when we find people we think that are good orators, they're intelligent. Okay? I'm here to tell you guys, this came out of me. Go and look at it. Have any lawyer you know look at it. Of course, a lawyer's going to tell you, anybody who's listening, they're going to tell you there are things that, well, maybe they could do this, but that's a lawyer's job. But ask him anything, if anything, in any document you see on our site does not detail everything that I said. Now, that's what's supposed to be legal. That's what legality is. Illegal is misleading people and not doing what you said you were going to do. Right? A contract is simply the person. Remember that. Whenever you write a contract is the person. If the person is full of shit, the contract's full of shit. Let me explain something to you. I have no role in this at all except for putting it together. Now I need you to wrap your head around that. So when you see this company running, you're going to say, okay, well, you know what? We did that. Okay, of course, Mr. Reed was out front, but the CEO that was hired, but it was because of him. He's the one that applied a CEO. He didn't try to put himself as a CEO. He told us in the beginning he is not qualified to be the CEO of a $3.7 billion company, but he knows the people who are. He knows the people who are. He said that he knew the architectural firm. He said that he could get us a flag. He did. He said that he'd create all the documents and legal documents. He said that he'll put together strategic relationships. I've done all that. Go look at the site. Fortune 500 companies. I'm meeting with one Thursday. Sitting down and talking with him. What type of hotel do y'all want? And where are y'all going to put it? That's what he's going to ask. So here's the thing. This is what I stress all the time. Know who you are and know who you aren't. Know who you are, know who you aren't. I tell you guys that always be evaluating you. I'm not a Fortune 500 CEO. I didn't even graduate from college. Not that I couldn't. I'm just saying I didn't. You don't have to graduate from college to be successful in business. You just have to be good at business and understand business. If I can tell you guys, I just see all this stuff. I don't know how to explain it to you. I just do. I've always have. So let me further explain to you guys. And I'm going to break this up because we've been going a while. And I thank you guys for hanging in there with me. But we have Article 5, or Article 4, Article 5, Article 4. All of this is about you. I need you to understand that. So go back, make sure you read Heritage Reach Holdings, Capital Participation, and Treasury Agreement, because all of this is about you. It tells everything is in here. How our taxes are going to be filed, how the money's going to be laid out, all of that. Okay, how we're gonna hold the money if that's what you want, because we can't hold your money unless you say hold it. Okay, but I just gave you what is going to be a 10-year projection or valuation per investor reaches approximately $13.8 million cumulative value through compounded ROI. Now, what does compounding mean? Again, I try to make it simple for you. This is what compounding means: growing your money. But they can only grow your money if you keep it in. Okay, look it up. If you take it out, your money's out. So if you get to the point where I need $10,000, oh, I can sell my stock. What you do inside the organization, once the company becomes IPO, you sell it, you just put it up and they can sell it. Or you sell it back to us. But think about it. Do you want to be a multimillionaire in 10 years? Or do you want a couple $1,000s? I want you to understand that. Article 4, stockholders payout mechanics. Each investor contributes 5. Okay, we went through that. Number 3, investors may elect to receive quarterly dividends or reinvest for compounding growth. That's what I've been telling you guys all evening. It's your choice. You can choose to keep, and we're going to ask you. So before you sign this contract, because you got to sign it. In the end, it says stockholder. I've already signed it. It says stockholder. So when you see it on the line, that's you. Okay? You're agreeing to 2 things. You're agreeing that on January of 2026, you're going to give $500, and you're also agreeing to the terms in this. So you need to read it and let any lawyer you know look at it. Okay? And any question they want to ask, have them email me. Now, I'm not going to say I'm going to change the contract for your lawyer. What I'm saying is I'm going to answer any question they want to ask. That's my job. I'm the proxy. I'm the proxy of this company, and you're determining if you're going to invest or not. You should have somebody that speaks for you. Okay? Article 5, governance, auditing, and oversight. Somebody say that again. You got to have it. Governance, auditing, and oversight. Quarterly treasury statements detail all inflows and outflows. Quarterly means every 3 months. Independent audience by, I'm not going to say the company's name out loud online, but they're on here. And there you can see their partnership document in our strategic relationships section of our website. Investment committee will veto authority for non-core investments up to $10 million. Minimum 15% liquidity covenant maintained. In other words, we keep 15% to make sure the lights stay on. Okay. Article 6, this talks about me. So listen closely. I'm going to say this online so everybody can hear it. Article 6, legal and fiduciary covenants. All funds held in segregated custodial accounts to preserve REIT compliance. No commingling of funds for unrelated or speculative purposes. In other words, nothing's just going to pop up where somebody needs some money. I don't care who they are. You got to go through a process. You got to go through the board, and you have to go through the CFO. You understand? We have to agree that, hey, the CEO can't just come out and say, I got a good deal. No. This is part and parcel of what I want you guys to learn. In any kind of business you're doing, take at least 1 month to look at the contract. And in this instance, I'm going to give you guys longer than that. You got until January. Okay. I'm going to continue. I can keep laying it out, but I want you guys to read Article 6. Okay. Um, and again, Article 6 has to do with me too. I'm in there. Okay. Article 6, I'm going to read the compensation and ownership rights of the proxy. The proxy is me. So I'm saying this online so it can be heard. Juan S. Reed, proxy, as architect and sole idealist of the community REIT, shall receive 15% equity ownership across both Heritage Holdings LLC and Heritage Management LLC. Okay. The proxy agrees, I'm saying this online, to defer. That's what they're going to ask y'all to do, to defer all dividend receipts for 5 years following this agreement's execution. Deferred dividends will accrue at the REIT's average yield rate and become payable beginning in 6 years, in year 6. Okay, same thing I told you guys earlier. I'm not getting any dividends for 6 years. Preliminary board members retain first right of refusal for any equity transfers, proxy assignments, or future issuances related to the proxy's ownership stake. That means, second to me, the preliminary and the permanent board, well, not the permanent board, they'll be given an offer. We'll agree to pay them this much to conduct themselves on the board. But we're talking about the people that are on the preliminary board that'll make all the decisions when hiring people, everything before the company starts, everything that I'm already doing. There are 2 of us, or 3 of us doing it right now. Okay. All right. The proxy agrees to defer. Okay, I said that. Preliminary board members retain first right of refusal, like I said before, any equity transfers, proxy assignments, or future issuance in proxy. The proxy's equity does not confer, listen to this, operational control. Mr. Reed, says my name in here, remains bound by fiduciary and compliance covenants as defined herein. In other words, I don't have access to any of your money, or I can't push money anywhere. Now, many of you guys talk to me about other people that have started real estate companies and all this other stuff. Well, this is what they didn't have. And I'm not going to say anybody's name because I'm not going to embarrass that dude, because it sounds like a lot of people invested in him and didn't really know it. Okay. And what do I mean by that? People know you by what you do. So here's the thing. Everybody got excited again. I am relinquishing y'all excitement. I don't want you to be excited. I want you to be informed. Okay. I am not the CEO of the company. I'm not going to be the CFO of the company. I'm not even going to be an officer. I'm going to be on the board. In other words, I'm going to help make decisions. I am the proxy. Again, I'm putting all this up together. I'll reread this, the top. It tells you what I am. I am the architect and sole idealist of the community REIT. That's what I am. That's why I'm receiving 15%. Okay. All right. It goes down and talks about term and termination, agreement effective for 10 years, renewable by majority investor consent, early dissolution triggers liquidation of all treasury assets and pro rata distribution investors. All notices, a bunch of legal stuff, right? And it goes on and on, term of termination, it keeps laying stuff out. And then you have my signature, okay? But all of this is to protect you guys. I don't need to protect myself because I know I put in here what I want. In other words, I negotiated with myself and said, I want 15%. I deserve 15%. All of this is me. So let me give you an example. If I excluded everybody and went out and got investors for myself to do this, I would own 100% of everything. But what I'm doing is I'm including all 40,000 of you. I will be just like you because I'm not receiving any dividends. You understand? Now, again, you have the choice to receive dividends or not. All right, guys, it's been an hour. I will be on here every night. If you miss me tonight, or if you want to invite somebody to listen, I am going to be marketing and focused on the community REIT, explaining to you guys and still making steps. We are not going to stop anything. We're not going to stop anything. I don't give up on anything. I've had people try to sabotage me. I've tried have people listen. You can't stop a man that has peace. Can't stop a man that has peace. For those of you who have been waiting on my book is out now. From Poverty to Peace. Go look it up online. From Poverty to Peace. It is a book with a disheveled guy on one side, because there's a couple of books named that. One is a disheveled guy, and a disheveled means he looks dirty. And there's one guy cleaned up in a suit. Okay, that's my book. Go and buy my book. There are a lot of concepts and ideology and perspective in that book that led me to the point of peace and prosperity that I'm at right now. I'm going to do a big marketing campaign with this, because the thing about it is I read the book myself and I cried. That's all I can tell you. I cried, and it's my book. I had one of my other mentees said the same thing. So guys, go out and get it, and I hope you enjoy it. I use my pseudonym. My pseudonym is Bavis Boveleau, Bibis Boveleau. Okay, so that is the pseudonym on the book. Thanks a lot, guys, for all your support. If I only got 2 or 3 of y'all to talk to, trust me, in a couple of months I'm going to have 100,000 to 1 million. That's just how I believe. All right, guys, thanks a lot. And go on the Community REIT website, look at all these documents. Take the time to read every one of them. You don't have to read them in one day. And cut and paste, copy them, and take them to your lawyer, or ask your lawyer to go online and take a look at them. Hey, guys, thanks a lot, and God bless.